Hello and welcome to our latest fund manager interview. With me today is Margaret Lawson, fund manager of the SVM UK Growth Fund. Margaret, thank you for your time today.
Welcome, thank you for your time.
Has the Brexit deal led you to change any of the holdings in the fund?
A lot of the companies we have in the fund are sort of high margin businesses, high margin services or high margin goods. And most of the companies, I would say to you, are already well positioned for Brexit. So really, when you talk to companies, perhaps, companies like Cranswick, there's been short-term issues, but on the whole, there hasn't really been any issues at all. And I think the issues that there've been, these will iron themselves out over the next sort of 6 to 9 months. And I think perhaps even a lot of the sort of, the government initiatives will actually make things a lot better as well. So again, I don't have any worries there.
The SVM UK Growth Fund is ahead of the Investment Association's all companies set to average over various long-term time periods. But over 1 year, it's been a particularly good spell of performance. What have been the main drivers behind that outperformance?
I think really it's more about a style. I think investing is really constantly changing, and it rewards those who learn and adapt to new things, right? And I really think it's more about a sort of style. That's what we do. And really not just what we do as investment managers, but that's what our companies do. So I really think it's more about a philosophy, rather than individual sort of stock picking. It's the strength of our companies. It's talking, it's playing to the sort of structural trends that I spoke about earlier, and the sort of criteria and features that we look for in business. Capital light models, ability to scale, high returns, good cash flow, all these things play in. So really, and I know you may think, we've had a very good time because we've had e-commerce and digitization, and these are trends that I feel that are going to continue. So they're not one-off trends, right? And they're going to impact absolutely every business. So we want to be with the companies that have actually are embracing this change, or the companies that are going to deliver that change. So really, that I really feel very confident about the portfolio. And even although we've got a bit of a cyclical rally just now, there's another very strong theme in the markets, and it's where we've benefited over a number of years, and that's in transformation, right? So you can have a business, say for example, Next, which is seen as a typical cyclical retailer. And what I think the potential is for that business is to transform itself into an e-commerce platform. It's not rated like that at the moment, but that's the potential ahead. And then perhaps even you look at another business, say for example, Restaurant Group, which was ailing with a lot of sort of dud franchises. And what we've seen with COVID coming along here is it's been able to offload those franchises. It bought the Wagamama business. And you think, in recovery, obviously there's pent up demand there, but it's a very, very strong brand, and it can leverage that brand into dark kitchens, into food delivery. And the question is perhaps still the debt there, but I think good brands, companies that are going to be well positioned coming out of that. This transformation theme is really, we've actually done very well with that over the years, and these are the kind of companies that we continue to look for, businesses that are going to transform, get better earnings, better ratings, capital appreciation. That all helps the portfolio.
The fund has some tactical positions in cyclical businesses. Could you talk us through a couple of examples of those?
We have holdings in Wizz Air, so that's obviously done very well, and we didn't change that. We supported that. We've had we like businesses with pricing power, and I think coming out of this, that's what you're going to see for the airlines. They're going to have pricing power, so I think that's going to be a good place to be. I also like the paper companies, particularly Smurfit Kappa. You're going to have pricing power there. There's a business that's playing into sort of sustainability. E-commerce, 60% of its production goes to sort of fast-moving consumer goods there, and it's a world-class player. And then you've got businesses like Ashted, which is another sort of cyclical business, but it's a business that's really, again, another transforming business from a cyclical business to a growth, as it continues to play the sort of structural theme of rental, and it's moving into sort of higher margin areas there. And obviously, you've got the support of the stimulus in the US. So there's a few businesses that are within the portfolio that I would class as sort of a cyclical value businesses, but I think this, really, whether a business is a value business or a growth business, I think that can become very sort of muddied. So I don't really follow that.
Part of your investment strategy is to identify opportunities ahead of peers. So which companies at the moment stand out on that front?
I'm going to give you 4 companies. Okay, the first one is we're all obviously as a result of COVID, but even before then, concerned about mental health, particularly young people's mental health. And a company that's actually addressing this market is Kooth, which is a digital platform providing services and access to professional help, you know. And so I think this one has a good runway of growth ahead of it. It has long-term visibility, long-term contracts, and it's increasingly being adopted by, you know, the commissioning agencies in the UK. And the potential is for it to move into adult health as well. So I think this is going to have a long runway of growth ahead of it. Another one I'd like to mention is Reach. Reach was a sort of former newspaper group and that have been ailing for a number of years. And this is a company that has been reborn. It's all about data and about its relationships with its audience and how it can then leverage data, you know, and be able to sell that ahead, you know, to various verticals. So again, I think that's another one that's been reborn here. Another company is Loungers, which is a all-day bar restaurant in suburban areas, obviously playing into the theme that will not be working in city centres. Again, it's a very attractive proposition, all day operating, 7 days a week here, good margins, very innovative management, and a very sort of unique concept. And as a result of the pandemic and the collapse in retail in the high streets, they're being offered very, very good rates, you know, for new properties. So I can see great top line growth there, good margin expansion as it scales. And latterly, it's just S4 Capital, which is a new advertising business that came to the market in 2018. Again, it's playing into the growth of technology, digitization, and I really think that has a long runway ahead of it too. That's Martin Sorrell's vehicle here, you know. So a lot of people didn't have confidence, you know, that he would be able to build another business like WPP, but it's actually going very well. So that's another one that I would support going forward.
Fund management is currently a very male-dominated field. Do you think in 10 years' time there'll be a greater percentage of female fund managers?
I think well, you know, it's a dynamic profession, but I think really a lot of women don't know too much about fund management, and so we really have to get the word out there, you know, to the schools and the colleges that this is a great profession. You know, you're meeting different companies. You're really experiencing about the economy, about innovation, about how things are changing in our lives. It's a great career, but I think it's really got to start at much lower levels at schools and colleges. That's the important thing.
Margaret, thank you very much for your time today.
Thank you.